that don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful and talented co-host.
Hi JD, how are you?
Melissa. I'm doing pretty good.
Happy Monday.
It has definitely been a Monday.
We say that every week.
Yeah, but today, I practically got cussed out by a potential seller, so that was fun. But that's not what we're here to talk about today.
Let's talk to James.
Let's talk to James. We're super excited to introduce you guys to a guy who's a local investor in our market. He's also a local lender as well as a bunch of other places, but James is our go-to guy for all of our conventional lending needs. He's helped us do DSCR loans, cash out refinances, and helped a ton of Melissa's clients. We don't get any kickback for saying he's great at what he does. I'm not sure if it's so much that he's great at what he does or he just answers the phone and answers your questions. So we're super, super excited to introduce you guys to our favorite mortgage lender of all time.
And buddy.
James Mahieu. James is a senior loan officer for North Point Bank. James, thank you so much for taking time out of your day to chat with us.
Absolutely. Thank you for having me. It's been a long time coming. I've been watching your guys' podcast there and wondering when I was going to get my shot. So I appreciate it.
We're definitely glad to have you. So James, we know you, but there's definitely listeners that don't. Can you maybe give us an introduction and let them know what you're doing, and then we'll just take the conversation where it goes.
Yep, absolutely. So first and foremost, I'm a senior mortgage loan officer here at North Point Bank. I've been in the mortgage banking industry for 14 years now, going into this year. I'm also an investor myself. I've got 3 short-term rental properties here on the coast of Florida between Panama City Beach up to Fort Walton Beach. I also got a property up in Michigan too, but I have been knee deep in this game for a while. I originally made my first investment purchase back in 2007. Things didn't work out, kind of sat on the sidelines, but have jumped in here within the last 3 years and kind of started getting it going. And in the meantime, helping other people do the same thing. So I'm excited to be here and talk to you more about that.
Awesome, James. Well, specifically for our market, one of the questions that we get all the time from clients is, what kind of loans are available if I've already used my FHA or if I've already used my VA loan and I want to purchase a second property, what's the best loan? And that's one question, but the most common is, well, what are the interest rates?
Of course. Yeah. So obviously right now, interest rates are a hot topic. I mean, they're up, highest they've been in a little over 15 years. And, we've got some unique ways to kind of get around that. I'd say our first one, which has really been the most popular right now that I've been helping a lot of people with, is our second home advantage loan program. And with that one, you can do as little as 10% down. And what makes our advantage one a little more unique than other people's is that there was an adjustment that was done to second home loans about 1.5 years ago that basically made it where you couldn't do one with 10% down because everybody was hitting high cost. Whereas with our Advantage program, there is no overlays to make us hit high costs. So that program in itself, as of recently, I'd say in the last, 10 deals or so I've done with that, rates are in the upper 6s for that, which is pretty unheard of in this market where you're seeing really rates for primary homes, mid upper sevens now. So that one has really been the go-to. Like, again, it's our Advantage program. Can do that for people in all 50 states. Being a loan officer for a federal charter bank, I do business in all 50 states. So that's one thing that I can help people with that are not just solely vested here, but may have properties elsewhere, looking elsewhere to get something. So that one would be the lowest rate program available right now, for sure, for investors.
What are the other parameters around that?
Yep. So anytime you're buying something as a second home, number one, you got to have strong credit. I mean, guidelines say credit scores as low as 680. Really, without PMI being a bunch and everything, you really want to be over 700, ideally 720. Another thing buying a property as a second home is that you have to have a strong debt to income ratio, meaning you can't use any of the projected rental income for the property you're buying to offset what the payment's going to be. So you need to be a strong income buyer where when you're buying this property, your debt to income ratio after buying the property cannot be over 43%. So that's one thing that it's really for strong income people in that situation. But a second home loan, it's kind of a vague thing. Like, I literally did one for somebody that lived in Niceville that was buying a home in Destin, and we classified it as a second home because they live in the neighborhood, and then this is a second home. So it's kind of a gray area with that, but they're usually, as long as it makes, that's one thing I love about our underwriters, not being a broker, is that being a direct lender, I'm talking directly to my underwriters, to the investors. I'm not having to go through multiple channels and wait around. Like, I can get an answer like that, which I think is one thing that's really helped us what I'm doing.
And so most of the people we talk to, the reason that loan is good is because you get in with a lower down payment. And that's what a lot of buyers, out-of-state investors are looking for. That's what, you can use, and the lower interest rate. But for those of us or those that are more experienced, what are the conventional loan products that are out there for investors?
So specifically for investors, I mean, you always have your regular conventional stuff that we can do with a regular conventional loan, but some of the unique things we do are through our portfolio programs for investors. The most popular one is our DSCR program, which I know y'all familiar with that, but for those that are not, DSCR stands for Debt Service Coverage Ratio. And basically what makes that program unique and different from a conventional mortgage is that in order to qualify for that program, you're not having to supply any of your income documents. So no tax returns, W-2s, pay stubs, none of that is a factor for qualifying for that loan. It's strictly based on a person's credit score, how much money they have for the down payment, and then what is the projected rental income for that property compared to what is your total monthly payment. And essentially that third piece is determined by the appraiser. When we order the appraisal, we're ordering a 1007 market rent analysis report where the appraiser gives us what that estimated projected rental income is. And one thing a little different about us, we can do that projected rental income based on either short-term or long-term rentals. So a lot of people are just we can only do that based on long-term rentals, and that's not the case with us. You can do it based on short terms as well.
Yeah, that's huge.
Yeah.
Yeah. And some other things so that's a portfolio loan. And we have some income qualifying portfolio loans as well, where some of the other unique things are we allow you to close with title in an LLC. So a lot of investors are trying to protect themselves, personally. And so they want to close with title being in an LLC. And we absolutely allow that on our portfolio loans. They're all 30-year fixed rates. We also give the option for people to do the first 10 years as interest only. So again, another way to try to combat these higher interest rates is choosing that interest only time frame. It's still a 30-year fixed rate. It's just the first 10 years are interest only. That way you're kind of, maximizing your cash flow for those months with the intention that within 10 years, probably be able to refinance into something lower. We would hope that, during that time on top of, just gaining normal equity in the property. So,
and I think that's a big one. Now we all know that interest is the majority of your payment on the beginning on the beginning end,
Sure.
and then also because your interest only on the first 10 years, is it amortized over the next 20 years when you actually start doing principal pay down?
Yeah. So if you actually make it through that first 10 years and get to that 11th year when it starts, yes, then the rest is amortized over 20 years, principal and interest. But again, most people don't hang on to a mortgage for 10 years. I mean, on average, it's, 5 to 6 years. And of course, it's all interest rate driven. But where rates are at now, I mean, projected to where they're going to be in 3 years. Obviously, nobody knows for sure, but more than likely, they'll be back down to somewhere more reasonable. I'm thinking more like in the 5s or something like that compared to where they're at now. So the idea is that you don't really hang on to it that whole 10 years. Of course you can, and it's a chance you take, but yeah, it's just to really maximize cash flow during that time. So
yeah, absolutely. So James, the other loan product that I think a lot of investors, it's died off a little bit. The interest in BRRRR investing has died off a little bit. Because interest rates have gone up. So that means you have to buy at a significant discount in order to get the equity in there, in order to pull the cash back out, in order to be able to rent it at a reasonable rate. But can you talk about the cash out refis? I know, like I said, Melissa and I have used you for cash out refis. Yeah,
absolutely. I mean, when we did ours, we did our cash out refinance with the DSCR loan. So the DSCR loan's not just for purchasing, but that's a great program. We do it with our DSCR and our income qualifying portfolio loan. With our income qualifying portfolio loans, you can do a cash out refinance within 6 months after you've owned it. DSCR with us, you have to wait 12 months before you can technically do a cash out, but our income qualifying is just 6 months. So it's still something that people are doing. And overall rates right now, and just our regular banking atmosphere here compared to hard money rates are still quite a bit higher from what I'm hearing from people, like up north of 10-12%. So it's still really making sense for people to do that.
And the thing that I'll say about that 12 months to be able to do the cash out refinance, if you're buying a property that's discounted enough that might be an option for you, usually you're going to have some sort of significant rehab that you're going to do on the property. Then you need to actually rent it out and start getting that income in, and then apply for it. So the 12-month time frame is right in line with there. It also takes obviously we're not CPAs here, but it also takes it from short-term capital gains to long-term capital gains if you're going to sell it later on. But that, different story with that. James, the other one that I know about and that I want our audience to know about that I think is really important for investors is your delayed financing program, and especially for, landlords, right, that want to get in at the best price and rehab and do all that. I think the delayed financing thing is awesome.
Yeah, absolutely. So the delayed financing, what that is it's basically when somebody purchases a property with all cash, then you can immediately, without any seasoning period, do what's essentially a cash out refinance without any seasoning period at all. Some people are like, well, why would I do that? What's the point? The point is that most time when people pay with cash, they're going to get the property at a better discount, right? Because cash is king, obviously. A seller's going to take that. So people that I work with use the cash to buy the property, and then immediately, day after closing, are contacting me to do a refinance to get a majority of that cash back. So that's really been helpful for people that I've been working with, just to try to make them not be cash poor and to, they won the deal. Hey, yep, they got it at a great price. Now let me get my money back. And that's something that we do in conjunction with it. We can do a delayed financing with DSCR. You can do a delayed financing with a conventional loan. So delayed financing is not just, married to only portfolio loans. It can be done with any loan. So, but it's been great.
Let me talk about those requirements. So if I buy with cash, is there a certain dollar amount that needs to be, that property needs to be valued at? If I buy a $10,000 shack in the middle of nowhere.
Right.
Is that going to qualify for that delayed financing? What are those?
Yeah, so really, just us as so that's going to depend which program you're doing the delayed financing with. For example, like our DSCR loans, our minimum loan amount is 75,000. So really, you're looking at purchase prices of 100,000 or more. Is really what you're kind of aiming at with that. Now, if somebody were to do one with a regular conventional loan, we could technically do that down to $50,000 if somebody wanted to do that with conventional financing. But if portfolio, we're looking at a minimum loan amount of 75,000. So it's based on the purchase price, whatever the down payment amount is. So really, you're looking at $100,000 purchase price homes is the majority of what people use that for.
Now, James, if I purchase that property cash, and it's just wrecked, it's hurricane damaged, it's completely trashed, are you guys still loaning on that based off of the purchase price, or does it need to be in insurable condition?
Yeah, so ultimately, I mean, the home has to be able to pass a regular conventional appraisal inspection. So it cannot be just completely trashed and holes in the wall and everything like that. It needs to be able to pass a regular conventional appraisal inspection. So not as detailed, of course, as FHA and VA, but still, anything obvious could be a potential issue. So, it would still need to pass that.
Sure. That's awesome. Really good information and really good programs that if you're working the right way, you can maximize your actual cash by using leverage provided by the lending institutions.
Absolutely.
So this one might be a little bit deep, but so we're seeing these interest rates continue to rise. We're seeing the Fed make a bunch of comments on it. I'm wondering if you had your crystal ball, which you kind of already alluded to, that you think a year and a half there going to be some change. But one, what's driving this interest rate to continue to rise, and when will it stop, James?
Yeah, the ultimate question that I get all the time.
I'm sure you do.
Yeah. I mean, I try to keep my finger on this, and I'm watching, networks that are constantly all just looking into the financial markets and everything. And, everything I'm seeing, obviously inflation has really been the number one driver of everything. That's the reason that they've been doing this, even though they caused the inflation. Now we're trying to bring it back down. And from what I see and from what I'm hearing, I think that we are probably about done as far as seeing any major increases. They're talking about there may be one more before the end of the year. I don't see that happening just because of how things are getting squeezed right now. I think we're probably going to maintain these levels we're at right now. And I think the soonest we're going to see any sort of, let off of any of that will probably not, the soonest would probably be the middle of next year, I think, like around maybe late spring, getting into the buying season, something to try to spark people there. But I think that would be the soonest. And, the talks are that by 2025, we might be able to see rates back in like the 5% range.
I mean, I'm going to be rich then. Just because there's so many people who are just sitting on the sidelines, no matter what, even though we can get the houses, at a lower price point now with really good concessions, they just will not budge, which is frustrating and confusing to me just because it's just a time thing.
There's less competition out there for sure. I mean, it's really a good chance for buyers and people, I know it's a cliche, but marry the property and date the rate is really, if you really think about it, just sitting there with your money, and if it's doing nothing for you, if you can make the numbers work with where the rates are at now, and they may not be blowing off the paper or anything, but if they still work, just think of what they're going to look like once they do come down a little bit, and you can always refinance, but at least you got that property at that lower price. Because I promise you, 2 years from now, we're not going to see, the prices, are going to be increased. I mean, that's just where.
Yeah, it's going to be the same as it was before. And there, there's 15 to 20 offers and escalation clauses, and it's going to be crazy like that again. And I try to, educate investors, and they just will not see it.
Yeah, it's difficult, but a lot of times investors, especially with a lot of these guru courses and stuff like that are out there, they're looking at cash on cash return and using that to make their entire judgment, but they're not counting the appreciation. They're not counting the forced appreciation. They're not counting the tax savings. Once you add all of that up, you're still getting a decent return on your money. And then as soon as you're able to refinance, when those rates come down to 5%, going from 7 or 8% down to 5% is huge, especially when it comes to cash flow. But as soon as those rates go back down to 5%, then we're going to see prices on houses start to go up. In our area, at least, in a lot of areas across the country, it's kind of stabilized. Maybe it's trending down a little bit. It's hard to tell if it's trending down because of the time of year we are, or if it's actually market coming down. But as soon as interest rates go down, that means more people can afford more house. That's going to drive the prices back up.
100%. Yeah, nope, absolutely. It's kind of being artificially held that way now because it is excluding people that normally would qualify from qualifying, some people. So, but definitely still plenty of options out there. And, we're still helping the smart and savvy people, make good decisions for themselves. So,
right.
Absolutely. James, I would like to go into, so one, you're an investor yourself and you own 3 short-term rentals. Can we talk about those a little bit and like how you got them, where you got them?
Yeah, absolutely. So, I got my first, So right now I currently have 3 short-term rentals and then a little second home cottage up in Michigan that pretty much just stays vacant. But for the ones down here, back in 2021, when I moved back to Florida, I started going to these investor meetups and started just, I knew I wanted to get back into that. I used to do it in the past, and I came across a condo here in Fort Walton Beach at the Pirates Bay. And to me, that was one that intrigued me because it wasn't only the condo, it came with that boat slip too. So to me, I was looking at it at both angles, like, hey, the condo's great. Eventually I want to have a boat and have this boat slip, so why not get something that brings in both? And so that was kind of the first move I made in regards to getting back into the game. And for a while I was having it being managed by the Casa, the big V word here, that was doing it. And eventually I got comfortable enough and started being around people that were doing it themselves, that I took over managing it myself, actually, at the beginning of this year. And between that time, my father and he had looked and got a condo at El Matador on Okaloosa Island, and the margins were really slim, that one. So I was forced into managing that one on my own right away just to make the numbers work. But I'm glad it happened because it forced me to get into it. And now I've kind of just taken that over, and it's really not that tough. I mean, to doing that. And I deal with it on a day-to-day basis, whether I'm working and talking to people doing it or doing it myself. So it's really something that I see. And eventually, my goal would be to have numerous short-term rentals across the country. I mean, ideally, my goal would be to have 10 different ones spread out around the country. When I retire, if I want to go somewhere for a month and then I'm not there, somebody else is staying in it, paying for me. And that's really my ultimate goal, would be to have that. So next market I'm looking at really strongly right now is probably the Tennessee market, I think, is somewhere I'd like to go. It's kind of halfway between here and home for me. So that would be ideal. But yes, still all on board with the short-term rentals, and still think it's a great investment that allows you to utilize your property and at the same time have somebody else pay for it on your behalf. So
what I'm interested in, because we talk to a lot of other investors, we talk to a lot of Melissa's clients, and if they come from bigger pockets or they come from any of these other investing world, they're being told, don't waste your time managing, hire management, do this. And so when they come to us and we tell them, hey, we recommend everybody starting out, if you only have 1, 2, 3, if you have a handful, maybe start considering offloading some of the most difficult to manage properties. But we tell them, you're giving up a lot of your profits to pay somebody else to do the property management, and they're worried about how difficult is it, how hard is it, how much time am I going to have to spend? Can now that you've done both,
100%.
Can you give us your opinion on that?
Yeah, no, I definitely had the same fears at first. I was like, nope, I just strictly want this to be passive. I don't want to worry about it. I just want to collect a check and just move on to the something else. And but like I said, I was kind of forced into it with my dad's first property. But what I've noticed, I mean, one of your great agents, Kyle Momany, got me set up with getting there's so much automation and different systems in place that really do all of this for you. I mean, it's really just the initial setup that takes the most time. So, I mean, between Price Labs, which helps me kind of, give me an idea on where the rates should be set, which I don't always stick to that, but it gives you a good starting platform. And then IGMS is what I use as far as keeping track of everything, if somebody books on VRBO or Airbnb, it all's kind of in that system. And it's just, you set it up and have automated messages that go out to people on certain times right before their check-in, the day of check-in. Everything's so automated with it. Really, the only time I'm ever spending time with it, self-managing now at this point, is either changing the door codes, which I do through my phone. It's all wireless anyway. It doesn't take any time. Or maybe answering a question can I check in early? Or, hey, I need to, that's probably the most common thing. So on average during the week, I mean, for the 2 properties I'm doing now, I don't think I spend more than 30 minutes to maybe an hour at the absolute most. So it's really not as much as I thought. I had those same fears. It boils down to, do you have a good housekeeper that you can trust? When they go on their unit, they're going to call you if there's something wrong. And do you have good maintenance people that you can call to if there's something that's, you can't handle yourself? Is there somebody that you can call readily? And, I've got good support systems set in place for both of those. So really it's that. Get it set up in the automated systems, get you a good housekeeper and a maintenance person. And really I'm much happier saving that 23%, than giving it to them for answering a couple texts and messages.
Yeah. And 23% is the mid range. We've seen as low as 16% and as high as 31%. So, you are bringing a lot more money into your pocket, which allows you to save that money up for another down payment, to use DSCR loan to buy another property and expand your empire.
Absolutely. And a lot of times those companies will price your unit so low just to keep it booked that they're leaving money on the table. I mean, I can't believe some of the times I would look and say, how much are you renting it for? And I'm like, no way. And I'd rather have it empty than get the wear and tear from somebody that's, maybe not as good of quality as guests that may not take care of it as good when you're selling it for too low like that.
Yeah. So, you're renting to the local high school graduate for graduation night for $36 a night.
Exactly. I'd much rather keep that unbooked that night than do that. Learn my lesson on that for sure. So
absolutely, James. Well, if any of our listeners wanted to find out more about some of the loan products or wanted to connect with you personally to see how you're managing or, the things that you're doing, where should we send them? Where can we direct them to go?
Nope, absolutely. So my direct line, I just have one number. It's my cell phone number. You can reach me on that anytime. Area code 850-499-6034. Also can shoot me an email, james.mahieu, Mahieu @northpoint.com. And I've got a website as well, northpoint.com/james.mahieu, that you can go on and see some of the different stuff, testimonials I have from other people, but that would be the best way to contact me. Or you can just call Melissa and she'll send an email and get me in contact.
Call me.
Absolutely.
Awesome, James. Well, we really appreciate you coming on and chatting with us. I hope you have a great day, man.
Thanks, James.
Thank you all. We'll talk soon. Thanks, guys.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter @TheRealEstateJam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.